The world of cryptocurrencies has been humming in recent months with an amazing breakthrough that might, well, fundamentally change the direction of digital money. Leaked Federal Reserve documents exposing a covert alliance with Ripple, the blockchain startup behind XRP, suggesting that RippleNet will be used to introduce the forthcoming US central bank digital currency, sometimes known as the digital dollar. Since XRP is positioned not only as a digital asset, but also as the fundamental fuel or gas for the new digital monetary system, this disclosure is really revolutionary. This suggests a nationwide demand for XRP for investors and our crypto aficionados, maybe forcing every US citizen to own XRP to engage with the digital dollar ecosystem. With estimates pointing to this strategic combination causing a seismic change in XRP valuation, examining the larger background of the US financial system helps one to appreciate the relevance of this event. Like many other central banks around the globe, the Federal Reserve has been aggressively investigating digital currencies as a way to modernize payment infrastructure, improve financial inclusion, and guarantee monetary sovereignty in a society going more and more digital. The digital dollar is therefore the result of years of study and pilot projects, all meant to produce a safe, efficient, and programmable currency capable of coexistence with cash and conventional banking. Selecting RippleNet as the backbone for this project truly emphasizes the technology's dependability, scalability, and compliance characteristics that make it especially fit for a central bank digital currency of this kind. Though they are veiled for confidentiality, leaked Federal Reserve internal memos revealed thorough blueprints outlining XRP's function in enabling real-time cross-border transfers and essentially acting as a liquidity bridge. This stands in very different contrast to past assumptions that the digital dollar might function just on traditional financial tracks. Enhanced interoperability with global financial systems made possible by the connection with RippleNet means less friction, less expenses, and faster transaction speeds. For regular users, this entails quick payments and unheard-of XRP acceptance and valuation spike. Every American could be credited with an initial XRP allocation, estimated at roughly $2,000 worth, to help enable adoption and guarantee liquidity within the ecosystem as part of the digital dollar rollout. Rumors also have surfaced, although this is yet unofficial as people convert and use their digital money. This would not only encourage widespread involvement, but also, create a wave of buying pressure on XRP. This widespread distribution quite fits more general CBDC objectives of encouraging financial inclusion and lowering dependency on cash. It also naturally increases the market demand for XRP, hence generating pricing momentum that can spread over world markets. Examining the figures highlights even how transforming this situation may be. The US M2 money supply, hence the total quantity of money in the economy, is over $20 trillion. The ramifications for market capitalization are genuinely shocking if the digital dollar effectively catches even a part of this supply operating on XRP. Some analysts using this methodology estimate that the market capitalization of XRP might climb into the multi-trillion-dollar region, therefore justifying previously unacceptable pricing levels. One of the most valuable cryptocurrencies worldwide, XRP, would be either alongside or even above the values of conventional financial assets. A turning point in this developing narrative is the forthcoming vote on the Digital Dollar Act set for June 16th. Should the measure be approved, it will formally establish the legal framework for the distribution of the digital dollar, therefore removing legal obstacles and, attesting to great government backing for the project. This date is under great observation by investors and stakeholders since it may set XRP's breakthrough trigger. Many people are getting ready for quick market swings once the results are out. Thus, the expectation around this vote already exudes great intensity. This regulatory measure emphasizes the increasing validity of CBDCs and XRP's essential part in this ecosystem. Even with all the thrill, it's quite important to keep a reasonable viewpoint here. Including a central bank digital currency onto a private blockchain network, even one as developed as RippleNet, comes with some quite difficult technological, legal, and operational issues. Problems with privacy, security, compliance, and monetary policy most certainly call for cautious navigation. Working with Ripple and other partners, the Federal Reserve will probably keep improving its strategy to ensure the digital dollar satisfies the best criteria of safety and efficiency. Although these difficulties are noteworthy, the development shown in leaked papers and continuous negotiations reveals a great will to overcome these hurdles. Macroeconomically, the digital dollar operating on XRP might really help the United States to become a worldwide leader in digital financial innovation. This action would improve domestic payment systems as well as affect international monetary dynamics, thereby maybe undermining the supremacy of conventional reserve currencies. With its capacity to enable flawless cross-border transactions, Ripple's technology naturally fits XRP to help usher in a new era of global financial interoperability. By giving rising nations access to sophisticated financial infrastructure, this change might speed up world trade, lower currency conversion costs, and strengthen those markets. XRP's institutional interest has been continuously rising. The news of the Federal Reserve's participation just accentuates this tendency. Reportedly expanding their XRP holdings in expectation of the digital dollar introduction are financial heavyweights, hedge firms, and sovereign wealth funds. Therefore, the possibility for a $60,000 price goal has drawn a tsunami of fresh players, ranging from institutional whales to retail traders. This flood of money is likely to produce notable liquidity and volatility in the XRP market, so presenting chances as well as hazards for investors. Market players should remain alert and well-informed, knowing the wider technology and regulatory aspects. Technologically, Ripple keeps coming up with ideas beyond mere payments. Its expanding line of products covers on-demand liquidity, real-time settlement, and smart contract features specifically for financial institutions. Active cooperation between Ripple with regulatory authorities throughout the globe strengthens its position as a reliable partner in the change toward digital currency. These events point to a strong